What's up, you moneymakers? What's up, you MULN shareholders, HCMC army, and CTRM investors? Welcome back to the channel. In this video, we will be talking about three of our favorite stocks. Number one, Mullen Automotive, ticker symbol MULN. We will be talking about HCMC, Healthier Choices Management Corp. Many of you asked me to do an update. So here is my weekly update that I want to share with you that you want to watch out before the next week trading sessions. And the third one is ticker symbol CTRM. There is a ton going on with this stock as well. All in all, these three penny stocks are one of our favorites on my channel. So watch the full video. Don't forget to motivate me to do that. Hit the like button. Subscribe to the channel. If today's your lucky day. If it is, then click the thanks and help out the channel with a couple of bucks if you have. All in all, I really appreciate all your help. Let's jump into it. Mullen Automotive, will it go below 10 cents? There is a lot of fear, uncertainty and doubt for Mullen. So let's talk about 5 days. We are down 17%. 1 month, we are down 50%. So we cut in half. We went from 22 cents, tried going about 23, 24 cents, but we could not sustain. And as you see, we got back down. So it's down 50% just in last 4 weeks. Now, what is going on? Mullen is burning a ton of cash, as you already know. In December, Q4 2022, they burned net income negative $376 million. Now, Mullen, let's look into it. Mullen stock, does it have enough cash to stay in business? Now, this is a legit concern, so you want to definitely look into it. Just don't jump the gun, because this is not the end of the world just yet. So take a look. 13 cents per share when the article was written. Right now, as I mentioned, it's 11 cents. Now, which has no car to sell yet at the moment. They announced that they have obtained a license for the exclusive distribution rights to assemble this particular Dragonfly electric supercars from China's motor company for sale in North and South America. Well, and good. Mullen says the cars will accelerate from within 1 minute or 60 seconds or 0 to 60 miles within 1.95 seconds, within less than 2 seconds. And it will have 200 mph miles per hour once Mullen company finishes to work the re-engineering and redesigning. Now, some of the question that is really being asked at the moment, what is this going to do? Because according to this Class 1 commercial electric vehicle van delivery that will be beginning shortly based on what Mullen says, including this work to satisfy $200 million or 6,000 van orders, the PO that they got from North Carolina car dealer Randy Marion Automotive Group. They did not really say how long it will take to fulfill the entire order exactly, but even partial fulfillment should do wonders for the company's profit and loss statement. You know why? Because it will add more revenue. If you take a look right here, we don't see any revenue at the moment. We see operating expense of close to 74 million, net income with R&D, this and that, licensing deals, 376.25 or 28 million. I'm sorry by my numbers. It's just the morning and it's a little bit cold here, but $376.28 million negative net income. So yes, there are some caution that warrants some caution as well. There is grand total of zero revenue, something more up to hopefully $200 million that they are trying to fulfill for. In the meantime, Mullen continues to bring cash at the rate of $86 million per year at the last report. This may sound like a lot because it is, but they assured the shareholders with $87.4 million in the bank at the present, the company certainly has enough cash on hand to survive another 1 year. So there is no risk for the company. They have enough cash to survive for the next 12 months. So I just wanted to answer that. Another thing that you also want to notice that will this drop below 10 cents? A lot of talks around. Will Mullen go below 10 cents? What is going on with Mullen? So on and so forth. We don't know. I don't have a crystal ball, but another day, another decline for EV. It's not just MULN. The market is turbulent, feeling the turbulence. Several technical indicators also suggest that they lost the interest. Now, if I show you in terms of the interest, it doesn't really seem like that they lost the interest. If you take a look, 212 million on March 13, 180 million mid-March. Around end of the March, we are seeing 338 million and 176 million, which is our volume on a daily trading session. Now, if you really don't know, or if you're new, volume is number of shares transacted within one trading session. But the biggest difference that you want to notice is we were at 24 cents, 25 cents. From there, we dropped to 10, 11 cents. So yes, it is a big drop, and this could be an opportunity for some people to buy more, get their average down, so dollar cost average, so on and so forth. But once again, it's up to you. I'm not a financial advisor. This is not a financial advice. This video is only for the entertainment purposes. I share a lot of my views and research with you, hoping you can make informed financial decision. Now, the second stock that I want to talk about is Healthier Choices Management Corp, one of our favorite stock. Many people are looking into it. They're getting uplisted on NYSE as the ticker symbol HCWC, Healthier Choices Wellness Corp, instead of Healthier Choices Management Corp. A lot of fan followers. There is a strong following. There are 85,000 close to watchers on stock tweets, so on and so forth. But the stock is struggling, and they have been between 1 and 2 level, as you can see. So it goes to 1, 2, 1, 2, and it plays the game and goes kind of like a bar coding, right? Now, if you take a look, again, it goes to all the way to 0, bounce backs up. Now, what is going on with Healthier Choice Management Corp? They announced the confidential submission of registration statement. Now, one thing that you want to notice is their volume spiked up in last few days. So we saw the volume were in hundreds million, 100 plus million and change, went to 70 million one day. Now, this particular stock had a huge volume of 40 billion before a few quarters, when there was a short squeeze, a lot of buzz around GME, AMC, CTRM, SNDL, HCMC, and all those stocks. It was doing so good. And all in all, this is an OTC traded stock. Now, over-the-counter stocks are usually getting less traction. That was not the case for HCMC. There were a handful of penny stocks that were so popular, and HCMC was one of them. And it is one of them today because they have a strong following. Now, if you take a look, from 70 million, we got back up 410 million, 273 million, and we closed Friday with 583 million and change in terms of the volume. So I don't 100% agree with this statement that there is people lost the interest. All in all, we're doing pretty good, and they have filed this particular spin-off for foods and food, grocery, and wellness businesses. Now, what that means is they're pleased to announce, their CEO says, confidentially submitted draft registration statement for spin-off, which we believe will unlock the unrealized value of what we are now calling HCWC. This filing will another milestone for HCMC attempt, or this filing is another attempt to create shareholder value. They have announced 4-point shareholder value plan to increase and provide the value for shareholder. They intend to distribute 100% of the initially issued common stock to HCWC. Now, there is some condition and then the rules to follow, but if you already own HCMC and if your dividend is more than $10, you should be getting HCWC stocks in the form of dividend, and it does not really cost you anything. In other words, it comes for free. Now, HCWC, they will be distributing to their common shareholders for HCMC in the form of dividends subject to minimum criteria. And based on what the company announced or suggested is more than $10 to become eligible on the record date if you own that. Now, don't quote me. Watch the full announcement or read the full announcement from HCMC and review on their own. I'm here just to present this information with you. By the way, if you like this video and if you haven't clicked the like button, hit the like button, subscribe to the channel. Separating the natural food and wellness assets in the form of brick and mortar store. What they're doing is they're expanding their footprint. They have a brick and mortar store in Florida, 18,000 square feet. They've expanded themselves in northern New Jersey as well as northern New York area, upstate New York area, and they're expanding their technology, what they believe and their values, and they are expanding their brick and mortar stores. Now, they also concluded that the company is extremely pleased to be continuing on their executing their 4-point plan, which they released in August 2022. You want to watch this full video. I reviewed this 4-point plan. If you click on the videos on my channel, you may be able to see a ton of HCMC videos, but find out the video where I'm sharing more information around this 4-point plan, and it is pretty interesting. Now, we already talked about the volume. So in my opinion, the company has a still good traction in terms of number of stocks. Now, every stock in general, especially the small cap stock, they lost traction with the market turbulence, and HCMC was one of them. But if you take a look, it is hovering, it is barcoding between 1 and 2, 1 and 2, 1 and 2, 1 and 2 for a longest period of time. Write down in the comment section below if you're able to buy at 1 or you were able to sell the stock at 2. That will be amazing, because if someone is able to and manage to get that sell at 2 and buy at 1, it's 100% profit within one single business day. The third stock I want to talk about is Castor Maritime, CTRM. Unlike HCMC, this is NASDAQ traded stock. However, we went below $1, and right now the story is not super great for CTRM either. 5-day 1.43% up, 1 month it is 42% up from 53 cents rather, went to 95 cents. 6 months we are up 61%. Year to date we are up 65%. 1 year we are pretty much flat. But think about it, if someone bought this stock around 50 cents, sold it at 95 cents, they almost double their money. So again, penny stocks are a risky investment. I wouldn't really invest more than 5 or 7. Definitely not more than 10% of my total overall portfolio. But it brings a lot of volatility. It brings an opportunity. You can double, triple, quadruple your money just in no time. On the flip side, you can lose 50, 60, 70% or maybe 100% of your investment. So invest wisely. This is not advice. I'm just sharing this information with you, hoping you can make informed financial decision for yourself. The Castor Maritime Inc., there is a ton going on. If you think about this stock, their volume is not really great. If I show you right here what they're up to, Castor Maritime Inc., they announced the sale of another Magic Rainbow for $12.6 million with an expected gain of $4.4 million. Now, what this company is doing, it's a shipping company. They started with around four vehicles or vessels, and I've been following this company. They buy more, they get more cash, they buy more vehicle, and they expand their business, and that's how they make the profit, and that's how they generate the revenue. If you take a look at the revenue, December 2022, close to $70 million in revenue, net income of $34 million, close to. Before that, Q3 net income $37.15 million, revenue $70.64 million. June, which is quarter 2, $67.5 million in revenue, net income $27.75. So this is the company. It's a cash heavy business, as you already know. So they'll have to dump more and more cash to expand their business, and to expand their business, they will have to manage cash. But what they have started doing, that I've seen the shift in the business, that they are selling the Rainbow for $12.6 million. Which is a huge profit, or expected net gain of $4.4 million, and that will really get them back into the cash on hand or green balance sheet, right? They're a diversified global shipping company. March 13th, they announced the sale, and which is an agreement subject to execution of definitive documentary satisfaction for this type of inspection or transaction. This vessel is expected to be delivered to its new owner during the second quarter 2023. So up until then, they'll be booking revenue. They'll be using this vessel, booking the revenue, booking the profitability, and they will sell. The company is expecting to record this second quarter 2023 with the net gain of this sell, MV Magic Rainbow, of approximately $4.4 million, excluding any transactional related cost. Now, they own 22 vessels, Castor Maritime. They own 22 vessels at the moment. As I told you, they kept getting more cash, infusing more cash to buy more vehicles, and expanded their business. They have done extremely well during the COVID time as well. And right now, what you see is what you really getting to see the businesses are doing pretty good. At the same time, they might have bought this particular vessels for cheaper price, and now they're seeing gains and they're selling that vessel for higher price. But they have aggregate capacity of 1.7 million DWT, consisting of 1 Capesize, 7 of Kamsarmax, and 12 for their dry bulk vessels, with as well as the 2,700 TEU container ship vessel. Now, this is exciting time for the business, and they have booked amazing revenue. They have also done pretty well in terms of the income, 33.7 million for the 3 months ended December 31st, and recording 118.6 million net income for the year 2022, which is amazing. Spin-off the tanker business is completed on March 7, 2023. So that is also really an exciting information. Now, is Castor Maritime a risky investment? You decide for yourself. I'm here to share this information with you, but these are some of the pros and cons of this business, right? The way that they're expanding their revenue, the way that they're expanding their income, which is amazing. Now, what you want to think in terms of the risk is the debt. That is the tool to help the business, but it's a business. But if a business is incapable of paying off their lenders, it will be going to be a nightmare situation for any business. What is their net debt? So Castor Maritime had debt of 137.3 million up to 82.4 million in 1 year. However, it is because of cash reserve, the 134 million, and net debt, it is as less as at about 3.32 million. Now, looking at the liabilities, you can read more information here. I'm not going to go into more debt, but again, their EBITDA is slightly worrisome. Their cash on hand is slightly worrisome as well. But given that they're doing pretty good in terms of revenue, that should be able to help the company on their balance sheet, so on and so forth. But the good news is the Castor Maritime's they have demonstrated that ability to cover interest expense with its EBIT. Delight us for the fluffy puppy does a toddler. But the truth is, again, it goes to the debt level. Current debt levels are slightly concerning, but that's what the business is when it comes to shipping industry. I hope you like this video. If you did, hit the like button, subscribe to the channel. I'll see you in the next video. Thanks for watching.